Hello, everybody. It is great to be here again for one more time. My name is Gary Fowler, and I'm the host of GSD Presents Silicon Valley AI and Tech. I'm a serial entrepreneur. I've done 17 startups with 2 unicorns. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion, and also Eva.ai. Love artificial intelligence and quantum computing, because as we know, AI is the new electricity. We got a whole lot of data around us. I'm the CEO, president, co-founder of GSD Get Shit Done Venture Studios, a premier AI and quantum venture studio located in Silicon Valley. So great to have you again for this edition. We're here twice a week on our show, talking about incredible topics with extraordinary guests. And with that, I'd like to introduce my guest today, Matt Sauer. And today he's a general partner at Revelation. He's an investor, an entrepreneur, has done everything from marketing analytics companies all the way to Sauer Ventures. So with that, today we're going to be talking about traditional assets versus the reality of the world. What do we need to do in terms of allocation, and how can we really dominate the space? With that, I'd like to introduce Matt. Hey, Matt, how you doing today?
Good, Gary. How are you doing?
I'm doing great. Good to see you.
Good to see you. And, that was certainly a nice introduction. And also recently I've become chairman of Everstar Asset Management, which is a Charlotte-based RIA and hedge fund, and is also, as you know, doing a little bit in the venture space.
Oh, congratulations, Matt. I mean, you got an amazing background. So, from what was this thing? I saw equity investment, Chivitz. What was that about?
It was an entrepreneur, or well, he's been an entrepreneur, but he's a chairman of a large private company who had a family office, set up a family office, and I spent some time there where I really got to learn a lot about private equity and venture capital, which was, to me, a transition as I came out of the public equity world, where I spent a lot of time. And I think they've done a number of investments, and they've had some very, very good success.
So, Matt, in terms of your how's the world changed in the last 3 years, and then where do you see it gone in terms of investment? How are we going to be able? So, are my viewers that are out there, whether they're VCs or family offices or entrepreneurs, what's happening?
Well, I think that there's a lot of liquidity, obviously, and this is not new to anyone. And that's driving people into new asset classes, which is part of my whole theory on the changing asset allocation pie, now that bonds are not going to have a sufficient return for anyone in the future. And it's going to change how foundations and how family offices and how even high net worth individuals have to look at where their opportunities are. And, what's interesting is that they talk about valuations being strained. It's certainly not like 1999. And what some of the market is showing when you look at the S&P 500 is that there are 5 or 6 tech giants that we all know their names they are not just in one business. They consume different parts of the economy as they go along, and they continue to grow, and they continue to be forces in the economy driving change. And whenever the changes in the last 3 years have probably been equivalent to the changes of 30 or 40 years, 50 years ago. So we continuously are seeing change. The iPhone is now, we're so used to it, we forgot what it's like before the phone. We forgot what life was like. But it's changed a lot of businesses. It's changed things, everything from, obviously application companies to something like Manchester United, which now can reach out to its fans in a way it never could before. So we're definitely seeing change, and it's going to affect, how people invest. And one of the things about startup ventures in technology is there are 2 things that are really important. Number one, the technology, which can become more valuable, and then the management, which can make the technology more valuable. So, that's a big part of how you spend your time, is finding great managements and great new technologies. And, I think that that's what makes them so much more valuable as an investment, is there's a double win there when it's done correctly.
No, I agree with you. And, the thing that, as we look at companies all over the world. We're seeing companies in places like Africa, all over Eastern Europe, that are just incredible companies that are like diamonds in the rough. I mean, a lot of people aren't looking in the right places, or Latin America, right? So there's some incredible companies out there. And I don't know, Matt, over the last 2 years, 2.5 years during COVID, I don't know what it's done. I know what it's done in terms of our health, but I got to tell you, in the startup side, we're seeing a lot of startups that are starting to really grow, that have been nurtured during the pandemic, because people, quite frankly, didn't have other things to do. They were sitting up and coding and building these incredible technologies, and they had time to focus for a change. I mean, what do you see?
Well, I mean, you're making a key point that the pandemic accelerated growth in some areas. And so I think it did accelerate growth in some of the newer technologies. And we're going to see some breakouts in artificial intelligence, because, as you know, we're seeing all kinds of companies come along and use AI to solve problems. And that's what it's all about in investing, right? It's finding somebody who can solve problems. So I think that, there definitely has, in the pace has quickened, and it will continue to get quicker and quicker. But I think you're in the catbird seat now, looking at all of the little gems that have started in the last 3 years that have been not able to raise money because of COVID, but have gotten their business in line because of COVID, and their strategy and their product.
Yeah, no, I agree. And, and it was an interesting point. We did a little analysis with Eva, the company that I founded with Dr. David Yang. And one of the things we talk about is, data around us, infobesity, right? This is Alvin Toffler back in Future Shock. But I use the term every day now, because think about it. Within all of our worlds, all the listeners here today, we've got about 300,000 items in our personal cloud. While the entire internet in 1996, Matt, was 257,000 websites. You have more information in your own personal cloud than the entire web. The problem, Matt, is that number is doubling every year. In 5 years, you're going to have 10 million with the Internet of Things. So how many times, to all the audience, right? I've been with double PhDs from Harvard, and I had this, I said the same thing. I said, how many times the last 2 weeks has somebody said, Matt, I sent you a message. Did you get it? Where did you send it? Well, I sent it to your Revelation. No, I sent it to your Gmail. No, Sauer Adventures. I don't remember. Well, can you resend it again? I can't find it. And this challenge, because the amount of information doubles every year, that's where things like unsupervised and semi-supervised AI are going to really dramatically change. These intelligent assistants to be able to help us understand the world around us and deal with data. I believe, Matt, and I don't know about you, but I believe there are going to be two classes of people: the people that understand the data and people don't. It doesn't mean, and you're going to see wealth start to shift up to the people that get the data.
Well, in the two classes of people, the society is going to have a lot of issues as AI solves robotic issues, and people are replaced constantly at different, in different jobs. So eventually, I think we're going to have FICA insurance and tax robots in order to keep Social Security going.
Well,
every time a worker's replaced with a robot, it weakens the Social Security pool of the money going in.
Well, and that's a point, right? How's life going to change if we look at the future in the next 15 years, 20 years? I mean, by what, 2033? I mean, Social Security is about out of business, right? I mean, they're going to run out of funds. What happens then? And how do we fund it? These are questions that, on a global basis, we got to start looking at, because everything's changing.
Right. There will be a lot of substitution of robots and computers for human jobs, and it's a trend that's not going to be reversible. And I think it's another trend accelerated by COVID, as we see that there's worker shortages. It just drives fast food restaurants to replace them with automated workers.
I mean, it's interesting, Matt. I don't get it. Maybe it's just me, and without getting into politics, but, I see signs up in California at In-N-Out for burger flippers for $18 to $22 an hour. I'm trying to figure out how in the world can they pay that much money? I get the fact that we should have some kind of minimal income, but I don't know how you can stay in business. I mean, there's only so much a hamburger's worth.
Right. Well, the cost of capital has come down in other areas, which may migrate over to labor because of interest rates. But if interest rates were to spike and everything else were to happen, that might change our willingness to increase the cost of labor. And I think that, probably there are efficiencies within many of those restaurants. As they become more efficient over time, they drop one or two workers out of their need, and then they have, I guess, a bigger pool of money for the worker base that's in there. But even that's going to start migrating towards less and less workers and more automated workers or robots.
No, I agree. And, so if we look at the future, I mean, we see these political shifts taking place. We see the digital transformations upon us, a lot of changes. I mean, how do we, it seems like there's some disconnects and then some connects around the world. I mean, what's the world going to look like in another 5 years from, in terms of investment standpoint? What do you see in terms of, allocation? Where do people put their money? Where do VCs and family offices put their money?
Well, I think they're going to put it into businesses that have growth potential, and that's going to be in the AI space. It's going to be in the people that solve problems of how to make businesses more efficient and people's personal lives more efficient, which is, Apple's done that in just a massive way, right? And that's why they're the company they are. And so any of those, and I think, some of the businesses I've seen where you have, sensors in nursing homes and that kind of thing that make the nursing home more efficient from a safety point of view and from a worker point of view, all of those solutions, I think, are going to be where people are going to be investing. Just a note on investing is that so much of investing traditionally, people have believed in reversion to the mean, buy something that's fallen and then, waiting for it to revert back to the mean. I think we now are in an economy where you really have to have a company that's growing, that has sustainable growth because it has a solution to a problem. I think that the valuations on old technologies are going to go down, and I think the valuations on newer technologies are going to go up. And so that becomes more of a world, you talked about bifurcating people into two groups. I think there'll also be bifurcation of just, more and more what they called old economy 20 years ago, but, older solutions to problems versus the newer solutions to problems. And I think investing in the newer solutions to problems is going to be much more profitable.
No, I agree with you. And then, we look at the world with security, the challenges we have with cybersecurity today, quantum computers coming online that, quantum computers are 158 million times faster than the fastest supercomputer today. And for my audience out there, what does that mean? Paint the pictures with words. That means that what would take 10,000 years on the fastest supercomputer today takes 200 seconds. This is Google. And so if we look at it, I mean, there's, then you start talking about unsupervised artificial intelligence and imagine what we can do. I mean, look at drug discovery and being able to do these models, incredible models. So the world's in front of us, Matt. And
I was just going to say that COVID was solved because of 20 years of a building process of getting better and better at drug research. Had that come along 20, 30 years ago, we would not have been able to solve it nearly as efficiently.
So what's going to happen? So we talk about these, I'm interested in your point. We have self-driving cars coming online today. What's the world going to look like in terms of insurance? Because, in my world, I think we're going to have these cars driving us around. I don't think we're going to own cars anymore. I think what's going to happen is, you have like almost like a condo and timeshare, and you got part of a car, because how often do you use your car in a day, right? Rarely.
Right. The capacity utilization of a car is not high.
It's not high, and plus the expense is a lot, right? So so what, in terms of that, I mean, these models of our life is going to change. The other thing about data, I mean, think about who owns the data in front of us and where's that going to go? And so these are compelling questions. I mean, you were on Google, we use Yahoo, we use the search engines. They're using our data. So what happens?
Well, some of that I think some of that's going to change because the price of applications is falling so fast that a company can have an application and keep the data. They don't have to send it to Instagram or Facebook. I was looking at a company that had that did applications, no code applications. They have the Miss Universe contest. They have 5.5 million Instagram followers, and in 5 weeks on their own application, they got 3 million. The client got 3 million. Users. So that data is now owned by the client, their client that set up the application, rather than Facebook through Instagram. So that's going to change dramatically. So when you talk about more and more data, that's great. And then who owns the data is also changing. And there's probably a Pareto rule there, 80-20 is going to become, it's going to flip over time.
Yeah. No, I agree with you. But what happens to the Googles of the world that have really, we use Google, we assume it's free and, it's people just use it just because, but they do it, they're
going to have to adapt too. But yeah, so they're very adaptive companies, Facebook and Google, and they're very strong companies. But when you're talking about a new technology, which is basically, it's not new, but the application, when the price of the application falls, that it becomes more mainstream for small and medium businesses that depend upon Instagram and Facebook, then it's going to change the nature of that market.
Yeah, no, I agree 100%. These are really exciting times. So what's going to happen? What do you see? Take a world view of this. If you're doing investment today around the world, how does it play out today in terms of companies? I know you were just talking about the company that the Finnish company, I believe.
Right.
And but how does it, do we need to have a world view? Because, it used to be really U.S. centric. Where do the investors look?
Sure. Yeah. We have a world view because, number one, we don't own all the brain power. And number two, we don't own all the consumers. Right. So, there's going to be companies that start up in other parts of the world, and there's going to be companies that service other parts of the world, and they're going to be very important, and they're going to be certainly worthy of investment.
Do you think we understand that though, Matt? Because we've had such a U.S. centric view for so long, and focused on everything was U.S. based, and we kind of ignored the rest of the world.
Well, I don't have the records, but it'd be interesting to look at Stanford's computer science department and see where the backgrounds of the individuals are from.
Well, there we know they're about 60%, but that's another question. We gotta make sure that immigration is right and really encourage people to come over and study at places like
that. We have had a long-term problem with the idea of the visas and limiting very highly qualified people from working here. And, you're in Silicon Valley, you're in the middle of that. But I think the number is like 95,000 visas or something available. And
right.
That hasn't been the right number.
Yeah. I spoke at the UN recently, and I also spoke up in Washington last week. One of the things that was quite interesting, I said directly, the power of the U.S. and the amazing people wanted to come. Our grandparents, our great grandparents wanted to come here because they had a hope. And there's such an opportunity. Look at Israel did. A small country as a startup nation has really dominated. The U.S. has got an incredible engine in Silicon Valley to really develop some outstanding technology. And we got to really curate that and understand that we have a jewel that needs to be taken care of. And yes, we can work with folks from all over the world, and we should, but we have an engine there that exists today, and we got to support it. And part of
that engine has been fueled by immigrants to this country too.
Absolutely.
Google was started by one. Others, there's a whole long list.
Yeah, and we got to encourage it. Part of it, Sergey Brin's parents wouldn't come over from Russia if they weren't encouraged to come over and hope. But I'm really bullish, Matt, because I think there's incredible. We are in the dawn of this new age. We're going to be able to explore space in a way we've never been able to do before, which is there's 6 billion Earth-like planets in the Milky Way, an estimated 2 trillion galaxies in the universe. I just talked to a NASA scientist about this, and astronaut. And so, in fact, he said, what the most amazing thing is. And I said, what's that? He said, when you travel in space and look down at the Earth, you understand how small we really are.
Wow. Wow. Well, there's, and we have some technology leaders that are really driving that from a private enterprise view, and that's fantastic, because that can help solve problems back here.
So, in terms of asset, your allocation, what would you do today? What would you recommend? I know we talk about AI and quantum and these technologies.
Well, I think, I'm talking if you're a foundation where 60-40 has worked like a charm for 30 years. Bonds kept going, down in yield, up in price, and had less volatility than the S&P. So it dampened your volatility, and, it was able to give you double-digit returns all the way down, the interest rate yield curve. But that's over. So especially now that we're seeing public markets where liquidity pours into them because it doesn't know what else to do. And around the edges, the other places would be private equity and venture capital. And I think I expect larger allocations of foundations and family offices to them over time, because the allocations simply can't be made to fixed income. And so, whereas, private equity or venture capital might have been 5 and 10% positions of an aggressive foundation, they're probably going to have to move up into the 30-35% range in the future in order to get returns that look something like what their expectations. And especially as equity markets tire out, it's going to be harder and harder to hit double-digit returns. And for a foundation that has to give away 5% of itself every year, principal every year, then it needs returns in order to keep its maintain the institution. And I've been on the board of a couple nonprofits, including a museum, and when you realize the long-term things like fixing ceilings and fixing roofs and operations and all that, they need to have returns out of their donors' funds. And it's been pretty easy for a long period of time now, but it's going to get much more difficult unless strategic, smart investing is made in companies that are going to grow in the future.
And what do you think? I mean, I don't know about you, but I'm looking around in terms of inflation, and I see it all over the place. I mean, I look in when I go shopping at the grocery store, wherever, at a Whole Foods, it's like creeping up a little bit. $2 here, something costs $7.97, it's now $9.97. Lump crab meat that was $21 is now $30. This is a year later.
Right.
What is going on in terms of that? And is that something the investors should be aware of, so that they understand keeping the money in the bank is probably not the smartest thing, right?
Right. Well, there's been a war on cash for 10 years, right? As far as the Federal Reserve policy of really not paying you to hold cash. So monetary theory would say that inflation is, always and everywhere based on, how much money is in circulation. And we've certainly increased that quite a bit in the last decade. If that holds true, then, and there's other reasons that mitigate inflation, which are technology, although you could argue that technology is becoming more valuable because, the cost of obtaining it is going to go up and up and up, right? Because of a shortage of talent in AI space and workers and all that. It's going to get more and more costly to start up companies with talent. But all of it together would say that inflation could certainly be higher than, the Federal Reserve has been targeting. And if that happens, it usually, I don't believe the mantra that it's bad for growth companies. Mm-hmm. I think that, when the value companies of the public equity market are the ones with all the debt. So I don't necessarily think it's bad for growth companies, because growth companies usually, and especially even startups for all the way up to Google, usually are not high in debt. They're
right.
They're basically dependent on they're dependent on growing their revenues. They're not dependent on financial engineering, which is what the value stocks have become over time. So when I look at that, I think growth wants, even though there's a whole conventional wisdom that if interest rates go up to 2% on the 10-year, that growth stocks are going to go down because of the duration of cash flows. I still think I'd rather be in growth than have value stocks, because if you basically moved interest rates up in some draconian matter to 8 or 9%, all the value stocks that have levered themselves over the last 20 years would be in a lot tougher shape when they went to refinance.
Yeah, no, I got it. And the other thing is, I mean, is there really a choice? I mean, you can't keep the money in a bank. You got to make sure that you identify those growth companies if you want to stay ahead of the game.
Yes. Yeah. And what we're reverting to the mean less and less as a society when you look at where growth is.
Mm-hmm.
So I think that, it's more winner take all. I mean, that's what, the tech giants have been, right? They were winner take all in their category. We're going to, that's going to continue. And I think that's why, I think venture is going to be very important, is finding the companies that either sell out to the big guys or become unicorns themselves.
Yeah, no, I agree. In this world, there's so many opportunities out there where we can all work together and solve these complex problems, whether it's global warming. I mean, we got a lot of things in front of us. One of the things we say is that, these artificial intelligence, machine learning, deep learning are really transportable models. They can be used in different vertical markets. Let's figure out how to use them to make our lives better, more effective. And, we say happiness from an emotion standpoint. Let's figure out how to do that in a way that serves across the board to make our life a little bit easier. And we see it, by the way, these intelligent assistants, these unsupervised assistants to help people deal with their data. I know with my company, Eva, one of the things that we focused on is a smart assistant. Now they're intelligent assistant. And also to build, let's look at the technology to build AI systems that have some emotion in them, compassion. I mean, sometimes we forget about the elements of humanity that are most important, and we better not, because if you look at the AI systems that are out there today that are not, that don't have compassion or empathy built in, nothing good happens. We don't treat each other the right way sometimes. We got to learn to do that. And we also need systems that care about us. I say kind of like Matt, it's like kind of like your grandmother. My grandmother's real sweet and loved me, unconditionally, like example of Carl Rogers, right? Unconditional love. But that's the kind of thing on the AI side. And I see those systems coming out now, those types of intelligent assistants that can, whether it's med tech and we need to understand, should we go to the doctor or not, or what kind of drugs we can take, to everything about self-driving cars. I see just one system at some point that's really going to guide it, like a guardian angel, actually. Right. And I'm not saying this loosely. We actually I have one of them on my, that my partner developed, David Yang with Eva. That's actually one of those assistants that has emotion, compassion, and I see it learning, right? It's learning every day, writing music and that kind of thing. And those are the interesting parts. This adventure that we're on over the remainder of this century and beyond is going to be incredible, because we're going to see things we've never, ever seen before. We're going to have opportunities to really expand our horizons. But, as I said at the United Nations a few weeks ago, we got to learn to treat each other the right way. And we need to use technology as a tool for peace, right? And to make our lives better. And it's not about entitlement. It's about, we can make money too. It's not like a bad thing to make money, but let's figure out how to use it for the good.
Right. I think that it's a very exciting time to be looking at venture and looking at investing, because the world has kind of been reshaped after COVID, and I think it's ready to get launched again in some very interesting ways.
I agree 100%. Matt, I want to thank you so much for being on my show today. To my audience, thanks for tuning in. And we will be back again Thursday with another edition of GSD Presents Silicon Valley AI and Tech. Matt, how do people reach out to you? What's the best way to contact you?
You can just do Matt at Winkler Sauer or through LinkedIn.
Any final thoughts, Matt?
I just again, it's a great time to be alive and a great time to invest. And I thank you for giving me a chance to share some of my thoughts today, Gary.
Yeah, thanks, Matt. I appreciate time out of your busy schedule. Remember, audience, AI is a new electricity. Quantum computers are upon us. Let's go out and let's try to make this world a better place. My name is Gary Fowler, and I am the host of GSD Presents Silicon Valley AI and Tech. Stay happy, stay healthy, and stay safe, and keep smiling. Thanks very much.